for people.
Sure.
You have to develop jobs for people, and then you solve the problem.
Absolutely.
Like it happens with NAFTA between United States and Mexico.
So why have Mexicans voted in recent times for a leftist, nationalist set of economic policies, and we've seen it hugely demonstrated with Pemex, for instance, as well, as opposed to your neoliberal, market-friendly, free trade policies of between 2000 and 2006. It seems that when we have this global debate about the role of neoliberalism going forward, Mexico is a great testing pot, and at the moment, the neoliberals are losing.
Yeah, this is a surprise to everybody in Mexico, the election of López Obrador, but it has a reason. The reason is we have not moved fast enough solving the problems of people, committing with jobs and education for them. So people is in a way desperate. They need solutions. And this is where the leading countries, leading economies, and leading businessmen and community, we must accelerate our pace. Otherwise, there will be no walls high enough to limit.
Having looked at this region from the outside, Central, Latin, Southern America, it should be bounteous. It should be the time of that continent, and it's not. Whether it's Brazil and the huge political consternation we've seen there, whether it's Argentina with the same, whether it's Mexico, the three largest countries south of the American border on the continent. It just seems that we go from one political crisis to the next.
Good question and good comment. It's very difficult to reach that high level of harmony between private sector and public sector so that we can work together hand by hand building those opportunities. And in Latin America, we take one step forward and then we come back 2 steps. This is the fight or the conflict between populism and demagoguery, these false prophets that come and promise everything, and the real market, the real economy that has to grow, that has to offer opportunities to people.
So here's the risk. We're coming up to a presidential election in 2020, and what we have seen in recent weeks has been a president doubling down on some of those promises around a deal with China on trade. We've seen some movement on that issue. Domestically at home, he's been pushing back about some of the Democrats' domestic policies, and even on foreign policy, we've seen a significant change in Syria, getting US troops off the ground in that country. The other risk would seem around the big promise, a big, beautiful wall on the border, the use of emergency funding, right, and problems with using some of those funds, now trying to close the gap between what has been built and what hasn't been built. Is there a risk, as we count down to the US election, that there's even more pressure on Mexico to come up with the funds to build that wall?
Well, we have to build our own future. We have to work on ourselves. Fortunately, the migration trend with Mexico reversed totally 100%. So many more Mexicans are coming back into Mexico because of NAFTA, because we're building the opportunities, because we're full employment today in our economy, than those coming in. The ones that are migrating is Central Americans because they don't have the opportunity.
But that's a fundamental, that's a fact that may not carry any weight when you're in a political cycle and Trump is talking about the wall, and if he's pressed by political opponents saying, well, where is that big wall that you promised? You could see how the pressure could then be quickly switched around to some form of a trade tariff or some form of a sanction on Mexico to try and get this wall done.
Well, he tried everything, but you know, that kind of leadership that is not a compassive leadership, a leadership really to promote economic growth. The case of Trump, he's isolating that great nation into 4 walls. And what is happening is that it's losing capacity to grow. I mean, 300 million Americans cannot be enclosed in 4 walls. That is isolation, and that limits the capacity to grow. I think these new visions for the world that are isolating, it doesn't help for growth, for development, and for jobs.
Vicente, it'd be great to have you around for one more chat. We talk about a bit more about the place of Mexico in the broader world and where it stands, but also about this extraordinary situation that you're, as I say, a board member of Current Life Services as well, and advocating the benefits of legalized cannabis. And having a conversation about soft drugs in a country that's been so ravaged by hard drugs, it'd be very interesting to have your perspective on that as well. So if we could do that after a short break, that would be great, sir.
Well, we're talking about the solution, because what we're doing is transcendent. Is we're taking away this beautiful plant from criminals, from cartels, from blood, from killing and putting it in the hands of governments, business community, science, academy. So it's a totally different situation.
Hold
today.
that thought, sir. We'll expand upon that after a very short break if we can. So we'll have another conversation with Vicente Fox, the former president of Mexico, in a very short while.
It's a fascinating conversation. In the meantime, I want to take you to Huawei. And of course, this is the Chinese tech company caught in the crosshairs of the US-China fight over trade. It's been reporting numbers today. Its third quarter revenue has risen 24.4%, according to Global Times. The numbers today, the 9-month profit that it has posted, the profit margin 8.7%. It has generated 610 billion yuan in revenue in the first 3 quarters of the year. And for me, what is key, contracts around 5G. It says it signed more than 60 commercial 5G contracts, which I gather is still more than what I had seen reported from Nokia and from Ericsson. So despite the pressure internationally about who does business with Huawei on 5G, I think those contracts are still coming in. Also, Wall Street Journal reporting today that Germany's 5G infrastructure won't exclude Huawei. So that is a key one.
Coming up later today, Facebook's Libra project is under pressure after a number of its early backers pull out. Elizabeth set to speak to Facebook's David Marcus as part of a panel on the future of finance at the IMF today. Bank of England Governor Mark Carney will also be on stage. That's coming up at 1600 Central European time. Plenty more as we discuss Mexico, emerging markets and cannabis after a very short break.
Right now on CNBC Make It. Think you've had tough...
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
She did it! Her first word! Listen, everyone.
Mama.
Oh, she's lovely.
Mama.
Oh, did you hear that?
Savings. Savings account.
Teaching your kids how to save may not be this easy, but you can get them learning good habits and skills from an early age, thanks to the range of children's savings accounts from Yorkshire Building Society. Just another example of real help with real life. Find out more at ybs.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Should we go halves?
I'll get this. Let me just get my card, which was in my pocket.
You can't control awkward first dates, but if you temporarily misplace your debit card, you can freeze and unfreeze it on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. You can only freeze some transaction types. T's and C's apply.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. You can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboards, but he stays on his feet and scores.
What's happening in college football this week? This Saturday, undefeated Penn State will have the whiteout in full effect as they host Harbaugh and the Wolverines. Michigan at Penn State at 7:30 p.m. Eastern. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
Rose shares are called open higher after the group raised its 2019 outlook, citing solid Chinese sales. Third quarter revenues at the Swiss drug maker rose 13% to over 15 billion Swiss francs, in part due to strong demand for its multiple sclerosis medicine. The company added that it expects to wrap up a $4.3 billion takeover of Spark Therapeutics this year.
A strong 5G network demand has helped ASML beat third-quarter net income forecasts. The Dutch semiconductor equipment maker also cited new technologies behind the solid performance, highlighting AI applications. The chief executive said 2019 will continue to be a, quote, growth year.
Mexico is edging closer to legalizing marijuana, with lawmakers set to vote on a bill by the end of October. Senate leader Ricardo Monreal told Reuters, quote, the end of the prohibitionist policy is good for Mexico. Vicente Fox is the former president of Mexico and board member of Chiron Life Sciences, and we'll continue the conversation with you. We've been talking a lot about Mexico and trade, but when it comes to cannabis, this is a landmark move that we may see. I think the market has well and truly tapped into the future of cannabis in Canada. But in Mexico, what are the benefits? Who do you see benefiting from this growth story? Because there's been a lot of cannabis companies that have been created around this Canadian boom.
A lot of benefits. Number one, that we will take away from cartels 40% of the income they have and they raise to do criminal activity. So that will be a strong step forward. Number two, job creation. This industry has proven, when it's in hands of the business community, that it can grow, that it can build up jobs and attract investment very solidly. So that will happen in Mexico. The two benefits will be accomplished. And finally, the solution to health problems that many people have, and they need these products to solve their health problems.
I like your optimism, but one of the big issues is around collection of taxes and regulation, because even in the United States, in some states where you have seen legalization, there have been issues with regulation, which has meant the tax collection has not been as great as many had anticipated. And if you look at the Mexican economy, with some of the issues with a well-run government and well-run institutions, there have been problems. So how do you close the gap to get the right regulation where the tax collection is as high as it could possibly be?
When you move from prohibition into open market, you have to regulate. And that's a very strong point on this new industry, highly regulated. And it's good for the industry because it comes from a very wrong background. So it's good regulation, but now we have to maneuver with that. And this is what is being discussed in Mexico. Fortunately, many good examples of success. If you go to many states in the United States, if you go to Canada, Uruguay, even parts of Europe, is progressing at a high speed. This industry is attracting billions of US dollars of investment into it, dedicated to expand production, but more so to get the brands into the market and to get the right products. This is why Chiron concentrates on patience, not on the amount of kilos of marijuana you can produce. It's patience. Your business is a trade name like Chiron, and it is a formula that Chiron has on products like Cuida. Excellent formulas that give results to the consumer. This is the right formula, not to produce more just marijuana.
So I had a question about the future for developing economies generally. We've talked about free trade. We understand your position on that. But there may be a future where globalization is in retreat, at least for a while. And if we look at the response of countries like China, with its policies, which are to try to move more into higher value-added areas of the economy. Is there a lesson there from other developing economies, including Mexico, that actually in the future, less focus on mercantilism and more getting into the sunrise industries of the future?
Well, we have specialized in manufacturing. So Mexico's strong position is manufacturing, very competitive. A lot of the investment that went to China now is coming back to Mexico because we have this combination of productive labor, quality labor, and especially the trade agreement. That trade agreement is reaching $1 million US dollars now. Incredible. And Mexico is up to that. We export the same amount as we import. That's what you look on a trading balance. It's a win-win situation, and we both are winning. Canada, United States, and Mexico.
Sir, I think we better leave it there, but very nice to see you today. Thank you very much indeed for covering a whole host of issues, from Mr. Trump to the cannabis industry to the future of Mexico and free trade and globalization as well. So we've covered a lot of issues. Vicente Fox, former president of Mexico and board member of Chiron Life Sciences. Thank you very much indeed for your time,
We should
sir.
disclose there was no product exchanged. for due diligence purposes.
Indeed.
Thank you for joining us. Plenty coming up on the show, including the countdown to the market open. Here's a quick look at how futures stand. Perched slightly positive for the French market, just tilting into the green, but weaker for German stocks and for the UK market. A big Brexit day as we continue to watch how those late-night negotiations transpired and what that means ahead of the European summit. We'll be right back after this.
Get greedy whenever you want. Subscribe to the American...
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
You're in charge of hiring and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Psst, parents, it's up to half price on all toys at Sainsbury's right now, so you can keep us occupied this half term and even stock up for Christmas. The Sainsbury's up to half price toy sale ends 22nd of October.
Subject to availability at selected Sainsbury's stores, excluding centrals and locals, not available online. Valid 16th to 22nd of October.
I tell you what used to be fair, lunch. You used to walk past pubs and just see people laughing and merriment. What happened to those cheery days? I tell you what happened to them. It's been replaced by a pint glass sitting by a computer full of condiments, plastic cutlery, and a pair of chopsticks you use for fishing the noodles out your keyboard. It's just not fair.
At TalkTalk, fairness is important. That's why, unlike some other providers, we offer fixed price plans on our fibre broadband for the entire length of your contract. Search TalkTalk Fibre. Fairer broadband for everyone.
Millions of people are missing out by having a current account that doesn't pay them any interest on their hard-earned money. TSB offers interest to all their Plus account customers for no monthly fee. Plus, you can stop your friends and family missing out by recommending the Plus account to them. And when they switch, you'll both earn £75. Search online or visit your local branch. Terms and conditions apply.
Here in Europe, beginning a brand new trading session, and it could be quite a key one for Brexit as we closely watch negotiations that have been taking place overnight. There is much talk about whether an 11th hour deal can be struck and enough detail to take to the European summit on Thursday and Friday, and maybe hold a parliamentary sitting over the weekend on Saturday. So all eyes on those developments, and the Stoxx Europe 600 pictured this morning, you can see somewhat cautious as a result of that headline risk. All in context too, after a very strong handover from Wall Street yesterday, we saw the market bouncing on some Brexit news, global optimism, very much in the trade for equities. But what we've had too in the backdrop, investors just debating the trade deal and whether the Chinese can fulfill the promises in phase one of that trade deal without the removal of tariffs that stand in the way. The other big point is now we've now moved into third quarter earnings season in the US, and some of those bank reports are mostly strong. One was weaker, which was Goldman Sachs, but in general we did see a better performance in stocks. So this cautious picture in contrast to some of the green that we saw in the States. Let's just get into what we've got by sectors as a result. And at the bottom of these boards this morning, as we weigh up some of the red and the green, that seems evenly split, and you can see that by sectors. Healthcare at the top, basic resources at the bottom. And the slide just over 1%. Every stock in negative territory, led by Rio Tinto, which has been updating the market today. Travel and leisure, by comparison, a modest drop, nowhere near the 1% drop we're seeing in basic resources. Technology just joining the mix of slightly weaker stocks. Also, in contrast to the very strong performance of semiconductors and technology in the US. Chemicals, industrials all trade a little bit weaker, some of those trade-related stocks. Banks just joining those in negative territory now. But in terms of the improvers, real estate, utilities, also some of the defensives here. Construction trades a little bit firmer, not much in the way of percentage gains to the upside on these charts. Healthcare about the best performer. And don't forget, we saw that in the US session. The best day for healthcare in the US that we've had in 2019. A very strong performance for that sector. Just moving on to the indices, let's see how the UK market is doing. 7,200, just holding on to that as we peel back by about 0.1%. But I think a lot of eyes too on what the pound does at this point, as we saw 128 the handle yesterday. Quite stunning performance on positive news. Weaker for the French market, not much for the DAX and for the Italian market. Healthcare driving that trade that we're seeing in Zurich on the Swiss market into the green. Weaker too for Spanish stocks, so it is cautious. Let's get into the latest around Brexit. Now, talks between the UK and the EU over a potential Brexit deal stretched late into the night in Brussels. Within the last hour, the French Finance Minister Bruno Le Maire has said there is a glimmer of hope on reaching an agreement, but some members of Prime Minister Boris Johnson's Conservative Party have expressed public doubts about the emerging deal, which could face a parliamentary vote as soon as this weekend. A quick look at the trade, 127.44. We are certainly bouncing around the ranges in morning trade. We got up to 127.77 a short time ago, and we've peeled off that, now down about 1/3%. And the UK market, the ranges on this for 2019 have been stunning. 7,700 the top end, about 6,700 the bottom end. So about 1,000 points in that range as we sit at the 7,200 mark today. Let's just switch over to those UK banks and see how they're performing. A lot of Brexit-related exposures here, and a couple of patches of green around RBS and Metro. The rest all trading weaker. The home builders also very sensitive to Brexit developments. Some news out of Barratt today on how it is seeing the state of play, and that stock trades weaker today. The exception in the basket of red, you can see Bovis trading into the green. Let's push on to the healthcare story out of Switzerland, as Roche has raised its 2019 outlook, citing solid Chinese sales. Third quarter revenues at the Swiss drug maker rose 13%, over 15 billion Swissy, in part due to strong demand for its multiple sclerosis medicine. The company added it expects to wrap up a $4.3 billion takeover of Spark Therapeutics that is slated for this year. And ASML, let's push on, look at that stock as it is modestly in the green. A strong 5G network demand helped the company beat third quarter forecasts on income. The Dutch semiconductor equipment maker also cited new technologies behind the solid performance, highlighting AI applications. The CEO is saying 2019 will continue to be a, quote, growth area. And here's how the chip makers stand this morning. Huawei, the one we're focused on today, as it has reported a surge in revenue over 24% higher in the first 9 months, offsetting concerns after it became embroiled in the US-China trade war. The tech company said it shipped over 185 million smartphones in the period. That is up 26%, also inking a significant number of 5G contracts. Steve.
People think off camera we talk about amazing stuff like sports cars and holiday homes, and we just had another 5 minutes. Yeah, but now we just had a 5-minute conversation, believe it or not, about Brexit and Europe as well. So we are so boring off camera, but let's try and make it more interesting on camera. Christopher Peel, Chief Investment Officer at Tavistock Investments. Good morning to you, sir. And Chris Wiley is with us as guest host, Chief Investment Officer of Connaught Broadley Wealth Management. Well, let's just talk about where we're at in these markets. What are the opportunities and what are the pitfalls at the moment? Christopher, you've got an October 2019 market notes piece, which I have in front of me as well. How much of it is dominated by political events in Europe?
Well, my lead paragraph is all about Brexit. That's certainly the focus of the day. Lot of water to go under the bridge this week to see whether or not Johnson can reach some type of revised agreement with the EU over the Irish backstop. I think that's the main focal point, because it also has huge ramifications on the EU economy itself, given that parts of it, specifically Germany, is already is nearing recession, if not in recession. They can't afford to lose access to the UK market.
So are we off to the races on the upside on, I mean, just the two countries you mentioned there, the DAX and the FTSE, if we get a Brexit deal, or will it be a false dawn, given the fact that the reason why the German market is challenged, and we discussed this already in the show, is not actually that much to do with Brexit?
Well, the thing is, the German economy is really suffering with the change in the way the car manufacturers are trading around the world. There's maybe been a lag in the move to using electricity, but in terms of the UK market, is cheap. Certainly the mid-cap space, it's been cheap for for quite a few years now. I'm not so sure it's right to just jump in here, because until you see the shape of the trading relationship, it could be very premature to say that the UK is going to all of a sudden trade back to fair value. But certainly the UK market is looking attractive on a worldwide basis.
So, Chris, what would you be looking for then as that catalyst, that moment when you think this undervalued situation in the UK is now one to be played? Because, I mean, you mentioned the trading relationship, but it could be a very long time before we see that. Is there anything you can identify nearer term which would persuade you to move back into UK mid-cap?
Well, I think the danger zone is looking at the currency. The currency's now moved quite a long way from 119 and change to 127. That will obviously have repercussions on the subset of the UK equity market that is exporting. But looking at the mid-cap space, PE ratios are very attractive historically, and then also in comparison to other markets on the continent and elsewhere in the world. But I'd rather play it through the FX. I have more confidence that there was a bigger short in sterling entering this final phase than in the equity market.
Just to go into that one more, is it against the dollar, is it against the euro, or is it just not matter? Just you can buy it against anything?
Well, probably against anything, but certainly against those two crosses versus the euro and versus the dollar. I think versus the dollar will go back up if we get if we leave the EU and we have a successful trade agreement or promise to have a trade agreement down the road. And then if you have the U.S. coming in with some type of a limited trade agreement, Trump's not going to let that go through at 125, 126. He's going to want to see it back closer to purchasing power parity, or the average thereof, which is closer to 140.
Right.
So, and that's why I see sterling gravitating back towards versus the dollar over the next 6 months.
Interesting. I just want to delve a little bit further into the equities picture. I've just been crunching some numbers here about where we stand at the moment. We're about 1,500 points higher than where we were straight after the Brexit vote. So there's been significant upside since that extreme dismay that was expressed in some sort of an equities picture if there happened to be a hard Brexit. What you've got now in terms of off the highs, about 500 points off the highs that we've had, the 700. So we've made significant headway in some respects back to the position we've now got. So what does that mean in terms of developments to the upside from here and also the downside? Because it seems like we're more slated towards some form of a positive outcome if you look at that picture. Well,
because the world's got turned on its head. Investors are now buying bonds for capital appreciation and buying equities for yield. And that's not we have to go back to school to get things right in our head. But I think the fact is the bond market is so heavily distorted that it's actually making equities look quite attractive. And yes, we've had a slowdown in global growth, but it hasn't fallen off. We're not in anywhere near a recession. So I think equities and global trade, are justifying today's valuations in equity markets.
UK is distorted as well, along with everything else.
Yeah, equities versus bonds globally are distorted because of QE and the return to QE. $17 trillion worth of bonds.
It's a nice way of putting it. That people are buying bonds for capital appreciation and equities for yield. Do you buy that?
Yeah, I think it is a nice way of putting it. I mean, we might come to discuss my letter later, but...
I can discuss your letter now. It's called Pride and Prejudice. And actually, what it does, it basically talks about 1813, I think it was her first of her big novels, 2 years before Emma, the one I had painfully had to read for O-level. And you're comparing the characters in Pride and Prejudice with... income appreciation, finding risk-free returns now, aren't you?
Yeah, well, looked at Mr. Darcy's income, which is reported to be £10,000 in the book, and that would have been
what's that in modern times, do you know? 800 grand
well, £800,000 at least, but actually more than that. I think it would come at a much higher figure if you allow for wage buying power then. And saying if that was an annuity, how much would you have had as a capital sum to get that sort of income? And the answer was, thanks to some research from the Bank of England, which goes back to the 1260s, when they look at government bonds or sovereign bonds, the answer was about £260 million then. But to get the same purchasing power now, you would need a gilt portfolio of 2.4 billion. So that's to this point of how inflated.
Jeff Cutmore, who else can have that kind of level of bond portfolio?
So you're not buying it for income, are you?
Invest in seriously liquid, high-performing technology names.
Yeah, well, indeed. Could try that.
You need that kind of portfolio and purchasing power parity. So that's not going to happen.
It just shows you how, to that very point, that it does not give you income at these levels. Wow. And one thing I did mention at the end of the letter was property. It was actually more likely that Mr. Darcy got his wealth from property. Property, you're doing better, actually. You've got a much better shot at that. Agricultural property, which would have been the case there. Although I did calculate that you would need an estate roughly the size of Shropshire to actually get that sort of income now.
Go back to Mr. Cutler. But the point is, are you advising people to buy ag now?
Buy agricultural property? No. I don't think you have to go that far. I mean, I think commercial real estate, actually, in the UK, which has been definitely weighed down by Brexit fears, actually does offer pretty good cash flows, pretty secure cash flows with a level of indexation.
CRE ex retail or CRE come retail, because I think there's a tragedy happening for high streets up and down, for shopping centres, you name it, up and down the country.
Oh, absolutely.
And I see no sign of abating, and it's got nothing to do with Brexit. It's got all to do with what Karen was just talking about, which is technology. So CRE come or ex retail.
Yeah. Well, most of what we've got is ex retail. You've certainly got to mind your eye on retail. I think that hasn't bottomed out, and particularly, the sharp end of it, high street or edge of town retail, I don't think has bottomed out at all. But there are quite a lot of opportunities in areas which are not heavily exposed to retail, or if they are, they're on very long leases to very secure tenants.
Joe, have you on CRE before we go to break?
Well, on property, I suppose I would not want to chase the market at this sort of level. I think Brexit uncertainty, you don't actually know where companies are going to be basing themselves, in over the next 2 to 3 years. But yes, I agree, the yield is attractive, but it could get more attractive.
Brilliant. Gentlemen, thank you very much indeed.
I really enjoyed that about Mr. Darcy and his income. I'm going to go and watch the movie again and just see his spending power.
Colin Firth or another one? There's a lot of Darcys out there, haven't there? I know Colin Firth was in Bridget Jones. You got me. Oh, he did both.
Yes.
He did do the original TV one, the one about 15 years ago. Yeah.
We're going to push on. US prosecutors in New York have announced charges against state-backed Turkish lender Halkbank over a multi-billion-dollar scheme to avoid sanctions against Iran. Prosecutors say Halkbank used money service business and front companies in several countries to evade the restrictions on Iran. Halkbank was not immediately available for comment. Here's a quick look at some of the Turkey-exposed European banks, and you can see a bit of a negative tilt for some of those names. Meantime, pre-tax profit at ASOS has plunged 68% for the full year. The British online fashion group has suffered serious setbacks in its bid to open warehouses in Europe and the States, which prompted a profit warning back in July. ASOS says it has made, quote, substantial progress in tackling the operational problems. Stock bouncing very strongly, 11% in session.
Coming up on the show, the IMF casts its forecast for global growth amid concerns over US-China trade tensions. More after the break.
It's up to half price on all toys at Sainsbury's right now, so you can keep us occupied this half term and even stock up for Christmas. The Sainsbury's up to half price toy sale ends 22nd of October.
Subject to availability at selected Sainsbury's stores, excluding Centrals and Locals, not available online. Valid 16th to 22nd of October.
It's time to do a bit of Debenhams with up to 30% off our favourite coats, knitwear and boots for the whole family, and 20% off throughout home. Shop now in-store and at debenhams.com.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Should we go halves?
I'll get this. Let me just get my card. Which was in my pocket.
You can't control awkward first dates. But if you temporarily misplace your debit card, you can freeze and unfreeze it on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. You can only freeze some transaction types. T's and C's apply.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Famed British money manager Neil Woodford says he will walk away from his remaining two investment vehicles, the Woodford Patient Capital Trust and Income Focus Fund. The announcement was followed by the transfer of £3 billion out of his flagship equity income fund, which was wound up by administrators earlier this week. Woodford said he personally regrets the impact on individual investors. Meantime, to Rio Tinto, which reported a 5% jump in iron ore shipments due to solid Chinese demand. The global mining giant is maintaining its forecasts as iron ore prices have come off recent highs following volatility around last year's dam collapse in Brazil.
The IMF has cut its global growth forecast for 2019 to the lowest level since the financial crisis, citing ongoing trade tensions between the US and China. The fund expects GDP to grow 3% this year, down from its July forecast of 3.2%. Growth is expected to pick up in 2020, but the IMF says the risk remains skewed to the downside. Speaking to CNBC, the BlackRock CEO, Larry Fink, painted a more optimistic view of the global economy.
U.S. growth is at least 2%. China growth is somewhere between 5.8 and 6.2. Despite we're paying so much attention to the political and geopolitical issues that we're losing sight that the world still is moving forward. And so I think that's one of the big issues that's going on now. It's not great, but it's not as bad as we feel every morning we wake up.
Uncertainty is set to remain despite some progress in US-China trade talks, according to some Fed policymakers. San Francisco Fed President Mary Daly says she believes the economy and policy accommodation are, quote, in a good place. However, cautioned uncertainty continues to weigh on businesses despite some positive movement in trade talks and Brexit. Meanwhile, St. Louis Fed President James Bullard echoed those views on uncertainty, but said he believed policy might be, quote, too restrictive amid weak inflation and slowing growth. Meantime, BlackRock's Larry Fink told CNBC he isn't a fan of negative rates.
I don't believe negative rates and persistence negative rates translates into more economic activity. It may translate into a depressive element to the economy, especially in Europe and Japan, where 82% of savings is in a bank account. So they're not enjoying the success that Americans do with low or negative interest rates.
So what I've done is, when I finished reading Pride and Prejudice, your Precy version, I pulled out their investment notes from Chris and Christopher. Yours I pulled out in one word, which is, kind of very briefly, return of Goldilocks scenario. potentially. Yours, I went through it and I've pulled out the following. Mired in slowdown, little impetus for global upturn, lack of confidence globally, momentum negative start of the year, global growth is deeply pessimistic. Shall I go on? All right. Not much room for error. You're talking about Goldilocks. You just downright pretty miserable, really, weren't they, those comments? Or have I just pulled them out unfairly?
You've pulled them out of context. I mean, our process.
Really
You're familiar with our traffic lights, I think.
Yes.
So
I've got traffic lights.
we look at growth, valuation, momentum, and sentiment.
There's a few.
When we look at growth, the problem still of the others, actually, they've got a bit better. So valuation is not so bad. Falling interest rates has helped. So there's a certain case there to be made. Sentiment, when I talk about gloom, that's a positive. The fact that people are gloomy on growth is a positive. So actually, that's why our sentiment traffic light is actually on the green side now. Momentum is uncertain. That's just a neutral for us at the moment. We could be seeing, there are signs of a potential beginning of a new uptrend. We're not discounting that. The problem is growth, and what we've just said consistently is we keep looking down that tunnel, looking for the lights, and they're dim and distant still. We would like to see some signs of improving economic momentum, particularly in the European bloc. If we see that, then our other traffic lights are actually clear the way for us.
And on your potential Goldilocks scenario, thank you for that.
Well, Goldilocks and Three Bears ends very well. So it's an upbeat story.
Well, she breaks the furniture, she ruffles the bed linen, and then she eats the porridge. Who did it go well for?
But they get the right porridge in the end. It's just right at the end. And I think that's really what...
she does. She nicked it all off those poor bears who had to work very hard. Was she stealing from the...
She was seeing...
She was a thief.
Yeah, but, she got there in the end. But I think, looking for positives, you've got lower rates. You've got, the return to QE. That's going to eventually run its course to the point where I think governments realize, saturation point. We've got to move to the fiscal side of the solution. And there's already talk in Germany of changing the balanced budget approach. And I think, I'm starting to feel that the trade deals that continue to be negotiated around the world on a medium to long-term basis are positive for global growth, global trade. There's a lot of focus on U.S., China, but there's other large deals that have been completed or in the process of being completed that will benefit the global economy. And you've already seen central banks move to cut rates.
We've spoken a little bit about some of the usual suspects in the herding in markets, and I wonder whether we've got another layer of that, because it's been a really important narrative in recent weeks around WeWork and the failure of the company to come to market. And this is obviously a big tech company that hoped to unlock some value and bring in more investors. Then you had Neil Woodford and a fund that has come crashing down because of a lot of illiquid assets that he was invested in, tech names that companies were going to come to market and that investors had hoped to get early access to. So does this mean, with this type of story unfolding around some of the tech and so-called growth stories as everyone reaches for a return away from negative yields, that we're now back to the same usual suspects on markets because investors might be a little bit shy about those types of investments?
Well, I think certainly people are starting to stretch. I was at a conference the other day and we were talking about bonds and the conclusion was, well, we need to start buying COCOs, contingent convertibles. And I thought, you're kidding me. That can't possibly be the way to get yield into the portfolio. It's certainly people who have forgotten what happened to those types of securities 10 years ago. But
even with Deutsche Bank more recently.
Yeah, but I think investors are starting to stretch bond land everywhere. People are going out the curve, down the credit spectrum. In equities, technology it's moving all the time, and you look at the Netflix and the Amazons. They're volatile, and I guess investors who are optimistic are looking for the next one to work. WeWork just is a model that in a global recession, the property valuation of that company runs aground pretty quickly. I think that's the consensus. Not to say that their model won't work, but they need to reduce some of that exposure if there is a global slowdown.
In terms of this underweight government bond story as well, and we've talked about the people buying bonds for capital appreciation, and everything that you gentlemen have said, and where the sensible conversations we've had says that this can't go on much longer. We're so far into negative territory. There's 15 to 17 trillion. It's got to end. Is there a trade where one can successfully short government bond paper, go up against central banks in some ways and saying, we think enough is enough, these valuations are ridiculous? Can one do that, or does one just have to take it on the chin and say, it's not a trade we can participate in? Let's start off with you, Chris, and then we'll finish with Christopher.
Well, we are short government bonds in the sense that we hardly own them at all.
So that's not a short? You haven't gone out and securitized, but borrowed the bond and gone short of it, have you?
No, but we're not.
Well, that's exactly my point.
But we're not a hedge
Can one
fund.
Short them?
But we're not a hedge. You can short them. Yeah,
Can our viewers do it successfully? I mean,
much harder, much harder. There's probably an ETF out there which does that for you. That wouldn't be something I advocate. I mean, what we want to focus on and being invested in the things which we still think can build an inflation-beating return for you over the long term.
Sorry,
there are still opportunities.
But isn't that amazing that we all think we've all been here for some of us many decades, some of us got their brilliant knowledge in a shorter period of time, but we've been here, we've done it. We think this is nuts. When I started trading German government bonds in the mid-90s in the options pit as well, we're talking about yields up here somewhere. So we've all been on a journey. And yet we can't actually short this product, even though we think it's a bonkers valuation.
There are, you can short it. There are ways of shorting it if you want to. I don't think that's necessary. There are ways you can embed a view on this. For instance, I've come back to property. Quite a few of those funds which are available have locked in their debt levels at fixed rates, but their rents are index linked, either through open market review, which over the long term you would expect to be geared to nominal GDP growth, or explicitly through inflation linkage. And if we do see inflation, a normalization of the environment, inflation expectations and inflation itself rise, and they've got fixed debt, so they have locked in these very low rates of interest, then the jaws open up in your favour.
Chris, are you trying to short bond markets?
The way we've got the trade on is we've got a steepening bias. We're steepening trade on, so long the front end, short the back end. We think that's they're going to let air out of the
structure of the market rather than the absolute directional trade.
So relative to our benchmark, where we have a steepening bias.
Am I just being disingenuous here and being a bit kind of like white van man about this? If you don't like something, short it in modern 21st century. Or am I just being too...
Well, it's a good job you're not an investment manager, if I say, Steve, because you probably would have put that bet on quite a while ago, and you'd probably be out of business by now.
Which is why I'm a journalist. And I left behind that bet 2 decades ago, and I left behind that business. I've got to leave it there. Gents, thank you very much indeed for that. Christopher, nice to see you. Looking very well as ever. The Mediterranean agrees with you as well. Or is it the other side of the coast? The other side, Atlantic coast. Christopher Peel, Chief Investment Officer at Tavistock Investments. Chris Wiley looking really well as well. I think West London agrees with you. You'll be back after a short break. Chief Investment Officer at Connor Broadley Wealth Management. Karen, you always look well. We've got Brexit after the break. Talks over a potential Brexit deal going late into the night. I just use makeup. Ahead of a key EU summit tomorrow. Details, not of my makeup, but of Brexit when we return.
Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living. Reinventing renting.
UWE Bristol thinks your child's next step should be an exciting one, and that it should start right here on this Wednesday morning, when you register them for our open day. Then, on the 2nd of November, they'll come and discover that UE Bristol gives them more than a university with state-of-the-art facilities, more than academic support to help them thrive, more than real-world connections with practical experiences that complement their studies, and more than a city with the buzz of Bristol. Help them choose more than a degree. Choose a 360-degree experience. To register them for an open day, search UWE Bristol today. After that, anything is possible.
Parents, it's up to half price on all toys at Sainsbury's right now, so you can keep us occupied this half term and even stock up for Christmas. The Sainsbury's up to half price toy sale ends 22nd of October.
Subject to availability at selected Sainsbury's stores, excluding Centrals and Locals, not available online. Valid 16th to 22nd of October.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
The 1304 LNER train, Coach C. Taking aunties with cold hands to nephews with warm cheeks in Edinburgh. Remorseful revellers back to their beds in Leeds. Business mums gliding over the Forth Bridge towards a door in Toddlers in Newcastle. And a band heading to London to our group of strangers in a tiny pub. This is us. These are our journeys. This is our LNER.
European shares on edge as the clock ticks down to the EU summit, which is seen as last chance for British and European negotiators to secure a Brexit deal. The right medicine for Roche. Shares in the Swiss drug giant hit a 5-year high after it boosts its sales guidance on solid demand from China. Overcoming the blacklist, Huawei sales leaped 24% in the first 9 months of the year, seeming to shrug off the headwinds from the US trade restrictions. And Turkey's banking index sinks, dragging on the BIST and the lira, faltering after US prosecutors charge Halkbank with breaking sanctions against Iran.
Markets here in Europe have been open for half an hour so far, and we have been watching more red ink creep onto these boards, some of it coming from the UK market and also over on the continent. Significant headline risk around Brexit. And don't forget, there's been some euphoria in markets that maybe, just maybe, a Brexit deal has been within reach. But negotiations late into the night continue this morning. So the market's now on tenterhooks, waiting for more information about exactly what is happening in those back channels. So far, the Stoxx Europe 600 just peeling off some of the high levels, showing a retreat of about 1/3%. Let's get into some of the detail as well. Don't forget, all this is in contrast to some of those gains on Wall Street. So we are seeing markets very much nervous around that. Wall Street moving high in Brexit news, also on earnings season. But this morning you can see patches of green for healthcare, also related to some of the US trade. We saw healthcare having its best day of 2019 in the States. Auto stocks moving into the green. Food and beverages very much a defensive play. The rest of the board you can see very much in the red, particularly on retail, down 1.1%. Financial services, basic resources joining the mix of underperformers. In terms of the stocks that are moving to the upside, here is how it plays out. Signify up 2.6%, the best performer on the charts. AstraZeneca showing some strength in the healthcare sector. In terms of some of the weak patches, though, we are closely looking at some of the UK property names. A bit of an update from Barratt today. That's not helped out the overall sector. Hammerson trades lower today, 5.2% south. And you can see UK names, in fact, are making it along the whole stretch of names here on the boards today. Steve.
Excellent. Talks between the UK and the EU over a potential Brexit deal stretched late into the night in Brussels. Within the last hour, the French Finance Minister Bruno Le Maire has said there is a glimmer of hope on reaching an agreement. But some members of Prime Minister Boris Johnson's Conservative Party have expressed public doubts about the emerging deal, which could face a parliamentary vote as soon as this weekend. Willem is live from Westminster. And Willem, am I right in assuming you're standing next to a gentleman who once went up against Jeremy Corbyn to be the leader of the Labour Party?
You're absolutely right, Steve. I'm joined by Owen Smith, a Labour MP, lawmaker here in the UK. I want to ask you, first of all, if the Prime Minister comes back from Brussels with a deal, do you think there's any chance that the House of Commons would actually approve it?
I think there's a chance. The numbers are obviously going to be very, very tight either way, given that the government doesn't have a majority and given that there are very many different interests in this debate. I hope that it won't pass, because I think it's going to be bad for Britain's economy and bad for peace and security in Northern Ireland. If it does pass, I hope it passes with the proviso that there is a further referendum, a further asking of the people of the country whether they're happy with the deal.
The Prime Minister clearly not someone who would like that prospect to be facing him, the idea of a second vote. Do you think that you and people of like mind will have the numbers to push that onto his plate?
Well, again, it's going to be very, very close. There will be a few votes either way. Last time we voted on this, because we seem to have been round this track many times before, it was the option